All right, let's just dive right into this explainer. Today, we are putting on our investor hats to rigorously evaluate IONQ. We're going to look at their historic 2025 performance, balancing that massive upside potential they touted in their Q4 earnings call with some of the sobering financial and operational realities buried deep in their 10K filing. Quantum computing isn't just a theoretical physics experiment anymore. It's a rapidly scaling public market sector, and IONQ, well, they're sitting right at the center of the whole shebang. Here's how we're breaking it down today. We'll start with the quantum leap of 2025, look at how they're building their platform, compare their growth versus their cash burn, highlight key risks for you investors out there, and finally wrap up with their 2026 financial outlook. Let's get to it. Section 1, the quantum leap of 2025. Let's check out the top-line highlights that made this what the CEO called a transformational year. Revenue for the full year of 2025 literally exploded to $130 million. I mean, wow. For a company operating in an industry that a lot of folks thought was years away from actually making money, hitting 9 figures in revenue, that's a milestone you absolutely cannot ignore. And this right here illustrates that momentum perfectly. That $130 million represents a massive 202% year-over-year growth compared to 2024's $43 million. To put that into perspective, in just the third quarter of 2025 alone, they brought in almost as much revenue as they did in all of 2024. They are scaling up their global commercial sales at a totally breakneck pace. During the earnings call, management made sure to emphasize that these historic results completely blew past their own guidance. But more importantly, and as the CFO pointed out, their revenues now exceed the expectations of all the other pure-play quantum players combined. Think about that for a second. This is a huge signal to us as investors that IONQ is currently gobbling up the lion's share of early quantum commercial demand. Moving right along to Section 2, building the platform. Let's see exactly how IONQ is trying to turn this early revenue lead into a giant competitive moat. So, how are they doing it? Through a highly aggressive M&A strategy. In 2025, IONQ completely shifted gears from being just a single product quantum computing company into a full-stack platform. They bought Oxford Ionics to leverage semiconductor scaling, grabbed LightSync for those critical photonic interconnects, which basically connects qubits remotely, and scooped up Quantique to dominate quantum networking and security. Oh, and pending regulatory approval, they are picking up SkyWater technology to bring secure semiconductor foundry capabilities right in-house. Now, this strategic pivot is absolutely crucial. By acquiring companies like that secure U.S. foundry, SkyWater, IONQ is positioning itself as what they call a merchant supplier, meaning they don't just want to build the best quantum computer anymore, they want to be the literal backbone for the entire industry. They're planning to supply the high-precision components, the manufacturing, and the security to the whole approved U.S. and allied quantum ecosystem. It's basically a modern-day picks and shovels play, but embedded inside a super high-tech platform. Okay, let's translate that quantum mechanics jargon into actual investor milestones. In 2025, they hit a 99.99% 2-qubit gate fidelity. What does that matter to us? Well, clearing that specific hurdle means they can stop agonizing over the underlying noise and focus all their energy on scaling up the system architecture. Because of that, they're now targeting a live demo of a 256-qubit semiconductor-based system in late 2026, with actual customer delivery slated for 2027. Section 3, growth versus burn. These tech breakthroughs are super impressive, for sure, but let's crack open the ledger and see the real cost of this crazy growth. Look, it's really easy to get caught up in the hype of those visionary earnings calls, right? But the actual SEC filing data grounds our due diligence. The balance sheet tells the unvarnished mathematical truth of what it actually takes to build a nascent technology totally from scratch. And here is the ultimate investor juxtaposition. On the bull side, IONQ is sitting on some incredible financial firepower. We're talking over $3.3 billion in cash and investments. Plus, they've got a multiplying backlog of $370 million, giving them some really nice revenue visibility. But wait, look at the bear side. All this growth is being dragged down by some super heavy losses. They reported a negative $186.8 million adjusted EBITDA for 2025, and they are carrying an accumulated deficit of nearly $1.2 billion. Yep, billion with a B. Turns out, building the future of computing is ridiculously expensive in the present. The main culprit behind this massive cash burn? research and development. That spend more than doubled, jumping from about $137 million in 2024 to over $305 million in 2025. Management argues, and fairly so, that this is absolutely essential to maintain their multi-year technological lead and to fund those upcoming 256-qubit systems. Essentially, they are in an all-out sprint against time and against very well-funded competitors to reach commercial utility first. All right, Section 4, Key Risks for Investors. Let's take off the rose-colored glasses and objectively lay out the explicit realities found straight in their 10K. Despite that super optimistic earnings call we just talked about, the SEC filings legally mandate a sobering reality check. I really want you to listen to this quote straight from their risk factors. We have not produced a scalable quantum computer and face significant barriers. That's a direct quote. Creating a commercially scalable, fault-tolerant quantum system is still incredibly difficult, mathematically complex, and at the end of the day, unproven at the scale needed to actually replace our classical computers. And it doesn't stop there. As investors, we have to weigh several other severe risks they outlined. Beyond the unproven scalability, they're operating in a very early stage and volatile market. They are dealing with supply chain vulnerabilities for highly specialized parts. The filing also explicitly points out recent, significant turnover in their top management team, which is definitely a potential red flag for operational stability. Finally, there's the ever-present threat of early technological obsolescence. A competitor could literally achieve a breakthrough in an entirely different quantum modality tomorrow and just render IonQ's trapped ion architecture totally obsolete. Moving to our final part, Section 5, the 2026 Financial Outlook. Let's gaze into the crystal ball and see what management is expecting for the coming year. Their forward guidance for 2026 shows continued aggressive scaling. They're projecting revenue to basically double again, landing somewhere between $225 and $245 million. But there's a catch. This comes right alongside a sharply widening adjusted EBITDA loss, projected to hit between negative $310 and $330 million. They are making a very conscious choice here to deepen that R&D hole to make absolutely sure they hit those aggressive hardware targets. Oh, and here is a crucial caveat for any of you out there doing your own financial modeling. These projections completely exclude the massive $1.8 billion SkyWater acquisition. Because that cash and stock deal hasn't officially closed yet and is still waiting on regulatory approval, literally none of SkyWater's potential revenue or the cost to integrate them are reflected in this guidance. Once that deal closes, the math changes entirely. So I want to leave you with this final provocative thought. IONQ undeniably has the capital. $3.3 billion in liquidity is no joke, and they clearly have the engineering roadmap to build a full-stack quantum ecosystem. But in this incredibly high-stakes race to build the future, will their technological execution actually outpace their massive cash burn? Will they cross the threshold of broad commercial utility before the market's patience and its capital just runs out? It's genuinely one of the most fascinating high-risk, high-reward setups in the market today. Thanks for joining me for this explainer. Keep your eyes on the data, and as always, keep learning.